Retirees are flocking to Pennsylvania, especially from New York and New Jersey. But why? Are you curious about how moving to Pennsylvania could give you some serious tax breaks in retirement? Stick around, because today I'm not just listing benefits. I'm going to show you the exact numbers, the real comparisons, and one trick that could drop your Pennsylvania state tax bill to zero. And I mean literally zero. But first, let me introduce myself. I'm your go-to source for everything retirement and taxes in the Keystone State. What I really love to do is help people like you make the smartest financial move of their retirement, as long as you're not a jerk. Now here's the thing. Most Pennsylvania tax videos list the same 4 benefits. Retirement income is exempt, property tax rebates, low sales tax, favorable inheritance laws. You've probably seen those 100 times. Today I'm going deeper. Real numbers. Real state versus state comparisons. And one thing nobody warns you about that could cost your kids tens of thousands of dollars. Okay, let's start with the number that genuinely shocked me when I first ran the math. Let me show you something most PA tax videos won't tell you. A married couple, $100,000 from their 401k, another $12,000 in dividends and interest. What do you think their Pennsylvania state tax bill is? Not reduced, not low, $0. Now how is that possible? Pennsylvania doesn't just exempt retirement income for residents 60 and older. That part most people know. But there's a second mechanism hiding in the tax code that almost nobody talks about. It's called the tax forgiveness credit. And here's why it matters so much. Think of your income like water flowing through a filter. Your 401k withdrawals, your pension, your Social Security, all of that gets filtered out completely because it's exempt. So it never even reaches the taxable bucket. What's left dripping through? Maybe some dividends, maybe some interest. And if that remaining trickle falls below certain thresholds, which for a married couple filing jointly can be surprisingly generous, the tax forgiveness credit catches whatever's left and wipes it clean. Zero liability. So a couple with $112,000 in total income pays absolutely nothing in Pennsylvania state income tax. But here's what makes this really hit home. Take that exact same couple and move them to Delaware. Same income, same sources. Their state tax bill? Roughly $3,900. Move them to New Jersey? That number could climb past $5,000. That's the difference between writing a check for thousands of dollars every single year and keeping every penny. Think about that for a second. You open your tax statement and it says zero. Not a reduced number. Zero. You and your spouse sit down to plan the year's budget, and that line item, the one that used to eat thousands, it's gone. That's a vacation with the grandkids every year. That's breathing room. That's not worrying about whether you can afford to enjoy the retirement you worked your whole life for. If you want me to run these exact numbers for your situation, call, text, or DM me. Details are in the show notes. And that's just the starting point, because in 2026, 3 new rules just changed the entire game. Now this next part is time sensitive. If you looked into Pennsylvania's tax benefits even a year ago, you're already out of date. This is information that didn't exist 6 months ago, and I guarantee most financial advisors haven't caught up yet. So what changed? Let's start with the biggest one. Governor Shapiro expanded the property tax and rent rebate program. This isn't a small tweak. An additional 175,000 Pennsylvania seniors are now eligible who weren't before. The income thresholds went up significantly, and the maximum rebate amounts increased right along with them. So if you applied in 2024 and got that rejection letter, throw it away. The rules have changed in your favor. It's time to apply again. But that's not all. Because at the same time, Congress introduced a new federal senior deduction. $6,000 for single filers, $12,000 for married couples. This is on top of the standard deduction, on top of your retirement income exemption in PA. Another layer of protection specifically because you're over 65. Now, here's where things get really interesting, and honestly a little controversial. Senate Bill 393 has been introduced in the Pennsylvania legislature. What does it propose? The complete elimination of property taxes for qualifying senior homeowners. I have to be clear, this is not law yet. It's a proposal, but it's being pushed hard. It has bipartisan support. And if it passes, think about what that means. No state income tax on your retirement income. Zero. No property tax on your home. Zero. in a state 90 minutes from New York City. That's not a fantasy, that's a bill on the floor right now. And if it doesn't pass, you still have the first 2 changes locked in. But if it does pass and you didn't know about it, that's money you'll never get back. Want to stay updated on SB 393? Follow me. I'll keep you posted the moment anything changes. Now here's the part that hits close to home, especially if you're sitting in New Jersey or New York right now. What if I told you that the biggest tax upgrade of your retirement doesn't require moving to Florida? Doesn't require leaving your grandkids behind? Doesn't require starting over in a place where you don't know a single soul? Picture this for a second. You're packing up and flying to Florida. You're 20 hours away from your grandkids. Thanksgiving means plane tickets and logistics instead of a short drive and a warm kitchen. Now picture this instead. You drive 90 minutes from Manhattan. Same region, same everything. Except now you're keeping thousands more every year. Let me give you the hard numbers. New Jersey's top state income tax rate is 10.75%. New York's top rate is 10.9%. Pennsylvania, a flat 3.07%. And remember, most of your retirement income in PA is taxed at 0, not 3%. 0. So when you run the real math for a typical retiree household, the savings come out to somewhere between $8,000 and $15,000 per year, every single year. That's not a small thing. That's an extra vacation. That's an extra emergency fund. That's not worrying about whether you can afford the grandkids' birthday gifts this year. And you're still close enough to drive to Sunday dinner with the family. Same hospitals, same culture, same doctors, same cheesesteaks, same grandkids running through your front door on weekends. Except now you've got an extra $10,000 or $15,000 in your pocket to enjoy all of it even more. You're not giving up your life. You're upgrading it. If that sounds like something worth exploring, reach out and let's talk. But here's where it gets really interesting, because most Pennsylvania retirees are only using one of 4 available programs. Here's what frustrates me. Most Pennsylvania retirees are leaving thousands of dollars on the table. Thousands. Because they only know about one of these programs. Maybe 2 if they're lucky. But the real magic happens when you stack all 4 together. I know that sounds like a lot. Let me make it simple. The first one you probably already know, your Social Security, pension, 401k and IRA withdrawals are all exempt from state tax if you're 60 or older. That's the baseline. 0 state tax on that income. But here's the thing most people miss. Even if you have other income, dividends, interest, maybe a small side gig, Pennsylvania's tax forgiveness credit can wipe that out too. So you've got 2 layers of protection already. However, even with 0 state income tax, you still have property taxes. And in Pennsylvania, those are above the national average. That's a real problem unless you qualify for the property tax and rent rebate, which Governor Shapiro just expanded. Now more seniors qualify at higher income levels, and the rebate amounts are bigger. So that's 3 programs working together. But here's the kicker that almost nobody knows about. If you qualify for that property tax rebate, you automatically qualify for LIHEAP. That's a utility assistance program that helps with your heating bills and electric bills. Think of it like a domino effect. Qualify for one, and the next one falls into place. 0 tax on retirement income. 0 remaining state liability through the credit. Reduced property tax. Reduced utility bills. Stack all 4 and a qualifying senior could save somewhere between $5,000 and $8,000 every single year. That's not theoretical. That's real money in your pocket. And if you're thinking, I didn't know about half of these, that's exactly why I do what I do. Reach out. Let's make sure you're not leaving a single dollar behind. Now I have to be honest with you, because most videos about PA taxes won't say what I'm about to say. Pennsylvania's property taxes are above the national average. I said it. And unlike Florida, Pennsylvania does have an inheritance tax. Those are facts that a lot of PA tax videos conveniently skip over. So who actually wins, Pennsylvania, Florida, or Texas? Let's do the honest math across 5 categories. First, income tax. This is where Pennsylvania dominates for retirees. Most retirement income is taxed at 0. Florida and Texas have no state income tax at all. But since PA already exempts retirement income, the practical difference is minimal. So far, PA holds up. But then you look at property tax and the picture shifts. Texas has the highest effective rates in the country. Florida is moderate. Pennsylvania is above average, however, PA has rebate programs that can offset it, especially after the 2026 expansion. So it depends on whether you qualify. Sales tax tells a similar story. Pennsylvania's 6% with broad exemptions on essentials is competitive. Florida charges the same rate but with fewer exemptions. Texas charges 6.25% plus local additions that can push past 8. Now here's where the real tension comes in. Inheritance tax. Florida wins. 0 inheritance tax. 0 estate tax. Nothing. Pennsylvania charges 4.5% to your children, 12% to siblings, 15% to others. This is the one area where PA genuinely loses. And finally, cost of living. Pennsylvania is generally lower than both Florida's popular retirement areas and Texas's major metros. So here's the honest bottom line. If you're pension-heavy, moderate income, and want to stay near family in the Northeast, Pennsylvania is hard to beat. More money in your pocket, more programs stacking in your favor, more proximity to the life you already know. But if you're high net worth with a large estate and you want to avoid inheritance tax completely, Florida might be your play. There is no single best state for everyone. Anyone who tells you otherwise is selling you something. What matters is what's best for your situation. And that brings me to something nobody warns you about. The inheritance trap that could cost your kids tens of thousands of dollars. Okay, I need to warn you about something. Every PA tax video loves to say the inheritance tax is favorable. Favorable compared to what? Let me give you the real numbers. If you leave a $500,000 estate to your kids in Pennsylvania, they will owe $22,500 in inheritance tax. Your spouse? 0, they're completely exempt. But your children, your grandchildren, 4.5%. Your siblings? 12%. A friend? A niece? An unmarried partner? 15%. Now compare that to Florida. 0 across the board. No inheritance tax. No estate tax. Nothing. So is this a deal breaker? Not necessarily, because there are legal ways around it. But you have to plan ahead, and most people don't. The first approach is joint ownership with right of survivorship. Think of it like a relay race. When one runner finishes, the baton passes directly to the next. No stopover, no estate court, no tax on that transfer. Simple and effective for many couples. The second approach is more powerful but requires more commitment. An irrevocable trust. Think of it like putting your money in a locked safe and handing the key to your kids. You can't open it anymore, but because you don't own what's inside, the state can't tax it when you die. You give up control, but your heirs keep every dollar. And the third approach, charitable bequests. Any amount left to a qualified charity is fully exempt from Pennsylvania's inheritance tax. So you support a cause you care about and simultaneously reduce the taxable value of your estate. These aren't loopholes. These are standard estate planning tools that any qualified elder law attorney can set up. The point is this: the trap only catches people who don't know it exists. Now you know, so plan around it. So does Pennsylvania actually save you money? Let's find out right now. Before you make any decision, let me simplify everything you just heard into 3 questions. A quick 5-minute tax audit right here, right now. By the end, you'll know exactly whether Pennsylvania is the right move for you. Ready? Question 1. Where does your retirement income primarily come from? If your main sources are a pension, a 401k, Social Security, or IRA withdrawals, Pennsylvania is a massive win because all of that is exempt from state tax. But if you're heavily reliant on capital gains or rental income, be careful. Pennsylvania's flat 3.07% rate still applies to those. They're not exempt. That distinction matters. Question 2. Do you have a large estate you plan to pass on to non-spouse heirs? If your estate is over $500,000 and your primary beneficiaries are your children, you need a plan. Not because PA is bad, but because 4.5% of a large estate adds up fast. Under $500,000, the inheritance tax is minimal and probably shouldn't be the deciding factor. Question 3, and this might be the most important one. Where are you living right now? If you're in New Jersey, New York, or Connecticut, moving to Pennsylvania is one of the biggest tax upgrades available in the entire Northeast. The savings are real. They're significant, and you don't have to leave the region. But if you're already in Florida, Texas, or Nevada states with no income tax at all, Pennsylvania may not offer a meaningful improvement for your specific profile. So here's the bottom line. If you answered pension or 401k to question 1, under 500,000 to question 2, and New Jersey or New York to question 3, Pennsylvania is your move. It's not even close. The combination of zero state tax on retirement income, the tax forgiveness credit, expanded property tax rebates, utility assistance, and proximity to everything you already know and love makes it one of the smartest retirement decisions you can make. And if tax-friendly retirement is on your list, let's make it happen. Reach out today, call, text, email, or DM me. My contact details are right there in the show notes. Let's see how we can make your dream retirement a reality right here in Pennsylvania.